Hello traders, my name is Sunday. You are welcome to Against FX. If you are new, please do subscribe to our YouTube channel. You can also contact us through our website againstfx.com so that we can train you if you're interested in knowing how to, or rather learning how to trade Forex. Forex is for everybody, both young, old, even if you are already pensioned from your job. This is even the best time for you to trade so that you can be making money from the comfort of your home. It's as simple as that. All right. So you just do well, contact us, visit our website, contact us so that we can assist you for you not to struggle for too long before you can find your feet. All right. Today's episode is better approach to trading demand and supply. All right. When you look at your chart, you always see where there is demand and also where there is supply. And the ability to identify these zones, these areas in a chart is what makes you a professional. Once you are able to spot those areas, that level, that zone, all you need to do is wait for price to come back for a retest before you join the trade. Let's assume you were very busy and price created a demand or a supply, then push away. You don't need to worry because price will still come back to that same level to retest that level. Why? Because there are still pending orders there that has not been filled. You say, how did we know? We know because the big players in the forex trading industry, they have large sum of amount that they push into forex trading anytime they want to take position. So what they do is they cannot just put in their order and just click buy like that. No, because the volume of their capital, you understand, because they trade with millions. All right. So it is not possible to avoid slippage. When they are locking in their orders, what they do is that they will create something like this. All right. A kind of consolidation. If their analysis is for them to push the price to the downside, they will now push it like this. And once they push it to this downside, it does not mean that the price has left you. All right, it just push away. Then you see a big candle like this. Before this, you see first you see consolidation. Then the second thing you will see a big candle that creates or rather created imbalance. All right, a big candle that has created imbalance. All right, before the market started pushing to the downside. Then what will happen? After a while, price will come back, find its way back. Price will find its way back to this same place. All right, before the price will now come, fill the remaining orders before it starts to push away, before it starts going to the the direction of where they want to push the trend to. All right, as simple as that. You first of all look at area where there is a consolidation. That is the first thing. Then the next thing you need to see there is a swift movement, a big candle that left that zone. All right. Once a candle leaving that zone, it will leave what we call imbalance in between. All right. Leaving that imbalance is a mark that okay, that place it's a demand or a supply zone. All right. So let's assume you were busy and price has consolidated, then push away. Don't worry. All you need to do, the smart way to trade that level is for you to highlight from the up to the down, then push it out like this. All right, as simple as that. From the high and the low, all right, mark it, then wait for price to come back. Price has pushed away, wait for price to come back to fill the remaining order, all right, before it starts coming down again. So that is just a simple way you can trade supply and demand successfully without having to bother yourself. All right? Because some people, what they do, they just, like, for example, let me give you an example here now. You see this area? There was a consolidation here. This consolidation here, this very one, this consolidation here is a what? You see, there was a consolidation here before you see price pushing to the upside. And when price pushed to the upside, what happened? Look at it. Price pushed to the upside, then it came down to retest, to refill the remaining orders here before it started pushing to the upside. As simple as that. If you can just be, if you are able to spot uh, a demand area or a supply area, be rest assured that you are on the right track. It's as simple as that. All right, so you need to be able to identify a demand zone or a supply zone. When we say supply zone, a supply zone is a zone where price consolidates. After that consolidation, then there will be a deep sell-off. All right. Now, a demand zone, that is a supply zone, a demand zone is a zone, an area where price will consolidate first. Then you will now see a buy. All right. You see a buy, a push to the upside. All right. So before that push will happen, there has to be a consolidation. And that process of consolidation is where the banks, the hedge funds, uh, those people, that is where at that point they are locking in their orders. All right. That is why that place is there's a consolidation. They are locking in their orders, and before you know, then the price will now push to the upside. Like I gave you guys like this, for example. Let's say they started locking their orders here. Price will push to the upside, push, come back, up, down, up, down. up, down, then they will now push to the upside. You see a swift movement to the upside. Then later on, you now see price coming down to that same place to retest that same place before price will now finally push to the upside. As simple as that, guys. So one thing you first of all want to identify is this consolidation. Once you see price just consolidating, just know that something is about to happen. Just like this one again. Let me show you guys this very one. You see what price did here? After all this consolidation like this, small like this, then you now see a push to the upside. After the push, what happened? Price came back to what? Fill the remaining order before it started pushing to the upside. As simple as that. You don't need to trouble yourself. All you need to do is that you come to us or you look for a mentor that will teach you how to trade so that you will not just be uh, wasting your time, so that you won't have what we call analysis paralysis. Because if you know, excuse me, because if you know what you are doing as a trader, once you are able to carry out your analysis, all right, based on your trading rules and risk management, all right, and you have to instill what we call discipline and patience. Once you have all of that, all you need to do is that you place your trade. Once you see your setup form, place your trade, and once you place your trade, as in your entry, your stop loss, and your target level. Once all those things are done, you just allow the system to do its magic. All right. Time to time, you just come check. That's all to know how what is really going on. All right. So that is how it is, guys. It's as simple as that. And a supply zone, a supply zone is quite different, or rather, is totally different from trading order block. I repeat, when you hear the word supply zone is an area, it's a zone, it's a zone on its own. This place now, if you say a demand zone, for example, a demand zone, all right, a zone where price consolidated before you see a push to the upside. But another block, now another block, this is a zone, but another block is this last candle here before a push. You see, this is a difference. So if price action is coming back because it has dished out price after the consolidation, it has dished out a buy and is coming back to retest the zone so that the orders that are still there will still be filled. Like I told us, banks, all those hedge funds, the big players, they are because of the volume that they push in, they cannot just push everything in once. They will put in some, push the price, consolidate, push the price to the upside, then bring the thing will come back, price action will come back to fill the remaining orders before it will move to the upside. All right, so that is it. So if price action is coming back to a demand or supply zone, it's coming to that zone to fill the remaining pending orders. All right, so if it enters the zone, if your trading strategy is what? Another block, you trade other block, price might come, interact, with the other block, that is the origin that caused the break to the upside, it will come interact with it, or it will just come tap the edge, the upper area, because all these zones, these are the zones. But once it gets to this top here, for example, let me put it, once it gets to this top, it has communicated with the zone. It can push away from here. All right, instead of coming to interact with this other block, it gets here, it has filled the order that it came there to fill. All right, then it will move away. That is why sometimes you see a retest of that zone does not tap you in when you put your pending orders as a order block trader. If you trade other block, I do trade other block, but the other block that I trade is a higher time frame. Any other block that is less, that is not from um, daily or 4 hours, I don't trade. It works. All right. That does not mean when price is pulling back, it will not communicate with uh, the other block on the lower time frame. Yes, sometimes it does, but most times price actually respect the higher time frame order blocks, because when you look at the higher time frame order block, is this whole thing here. All right, the higher time frame order block. Okay, let me see. Look at where I put this now. If you move to the what do you call it? If you move to if you take it to daily, what did I tell you? Look at it. This is the other block. This very one. All right. This is the other block. Look at it. Before price started pushing to the upside. So when price is coming back to this place now, it will just get to this very point here, and it will go back, because the other block of the 4 hours, or even other the 4 hours, 1 hour, 15 minutes, they are far down. As a matter of fact, they are the ones, those other blocks are the consolidation. So if you are trading a demand and supply zone, or supply and demand zone, you should always mark your structure from the daily. I tell you, mark it from the daily, because price respect those levels from the higher time frame than the lower time frame. I'm telling you the truth. Test this thing that I'm telling you. Okay, let's say, okay, for example, this one now, let me remove it. Let me remove this one. All right. You can now see that, look at it. From here, look at this one. Look at it. From here to this one. For you to understand it well, for you to really see it well, let me tell you, let me show you. You see, from here to here. So if I now look at it, if I now, okay, for example, if I now scale down to 4 hours, if I scale down to 4 hours, let me scale down to 4 hours so that you understand. Scaling down to 4 hours, what can you see here? Look at it. You see, this is it. This is the whole consolidation. So if maybe as where you enter your trade is 4 hours, all right, then you now take this point here, you want to trade other block. You now put your pending order here, or middle here, for example. You now put your pending order here, all right? Because you can play the open or the middle. But on the higher time frame, once price action gets to this top here, it will turn. And you'll be thinking, oh, why didn't price get to my level so it can tap me in? These are the mistakes that we are making. So guys, go and try this thing out. I bet you'll be profitable after this video. Thank you so much. Share and like.